On February 28, Iran fired missiles at Gulf countries. Within days, the Dubai market froze. Developers paused their launches, buyers walked away, and deals fell apart. And right now, trying to make a decision as an investor in this market is extremely difficult because you don't have a clear picture of what's actually happening. And making a decision without having a clear picture is how you end up buying a bad investment that loses you money, or selling at a loss only to watch your property you sold continue to grow in value. That's why I pulled every single Dubai transaction since that day, 4 months of data to answer the 3 questions I get bombarded with from investors daily. Have property prices actually fallen, and by how much? Is the off-plan market headed for a crash, and are sellers panic selling? By the end of this video, you'll know exactly where the market stands and exactly what to do next as an investor. But why should you even listen to me? My name is Salim and I've been in Dubai for the past 2 decades, and our company has helped investors invest hundreds of millions in the Dubai market. If you want to get in contact, you can send me a message on WhatsApp, link is in the description. Let's start with transaction volume. Out of every metric I look at, transactions tell me the most, and here's why. A seller can list a property at any price. Headlines can frame things however they want, but a transaction is different. It's a real buyer and a real seller agreeing on a real number. That's where we start. In the 3 months since the conflict started, transactions tell us exactly how this market responded. But before we get into the numbers, there's something you need to understand about how transaction data actually works in Dubai. Ready property transactions take 1 to 2 months to show up. For cash deals, it takes around 1 month from signed agreement, and for mortgage deals, it's closer to 2 months. Which is why the March and April data won't give us the accurate picture we need. Those transactions had already been agreed in February before the missiles ever hit. May and June are the first months where we have clean post-conflict data. In February 2026, Dubai recorded 5,500 ready property transactions. In May, that number went down by 55% to 2,300 transactions, and in June it actually went up by 30% to 3,100 transactions, which is good to see that the market is showing signs of recovery. A 55% drop in 3 months. Now, transaction volume will likely stay low until the end of summer, around September, because if you look at Dubai transactions historically, they always drop in the summer. Most residents leave the city, holidays slow everything down, and the market picks back up after September. So the conflict coupled with the summer means that transactions will likely be low until the end of summer. Now, if you look at rental transactions specifically, you see a different picture. See, rental deals show up in the data instantly, no 1 to 2 month lag like property transactions. In February, there were 18,500 new rental transactions. In March, that dropped down to 13,400. In April, 11,740, but then in May, 14,230, and in June, 15,400. So the biggest drop was from February to April, which was a 36.5% drop. And now it's followed by a 32% increase from April to June. So we're seeing the same pattern of increasing in June, which is signaling that rental transactions are slowly starting to recover. And here's why that matters. Property prices are ultimately anchored to rental prices. If rental demand recovers quickly, then property prices will likely follow. But transactions only paint one picture. There's another part of this market that's on almost every investor's mind right now, and that's property prices. This is the question I get more than any other, and that's, have property prices actually fallen, and by how much? Now, 3 months in, prices are the most accurate test we have. They tell us whether this is just a temporary shake or something deeper. But before we get to property prices, there's one more segment you need to understand first, and that's rental prices. Because as I mentioned earlier, rent prices and property prices are tightly linked. Rent moves first and then prices follow. So if you want to understand where property prices are heading, you start with rent. In February 2026, the average rent for apartments was 75,000 dirhams. In May, it went down to 70,000, and in June, it's still around 70,000. So there was roughly a 7% drop decrease in overall apartment rents. And for villas, in February, the average rent was 182,000 dirhams, in May 175,000, and in June it actually went up to 180,000. So roughly a 4% drop in rental prices from February to May, followed by a slight increase in June. And rents are unlikely to fully recover until the end of the summer period. Now, let's get to the section everyone has been waiting for, which is property prices. Here's what the data actually tells us. For apartments, the average in Q1 was around 1,970 dirhams per square foot, and in Q2 it's around 1,880 dirhams per square foot. So roughly a 5% drop. For villas, the Q1 average was 1,990 dirhams per square foot, and in Q2, almost no movement, 1,940 dirhams per square foot. So we're seeing a gap between villas and apartments, and the reason is simple. The supply of villas has always been extremely limited, and since the majority of villas in Dubai are sold by government developers, so the pricing and the supply is a lot more controlled. Apartments are a different story, however. There were plenty of overpriced off-plan apartments sold by smaller developers, properties that were going to take a hit regardless of the market conditions. That's why we see far more distressed deals in the apartment segment. It's simply bad assets correcting to what they were actually worth. There are still some distressed deals with villas, but the discounts are much smaller. We aren't seeing anything beyond 10%. But with apartments, we are seeing much larger discounts. But you have to be extremely careful here. A lot of those discounted properties were overpriced anyway when they were initially sold. So it's still a bad asset, it just looks more attractive because there's a discount slapped on it. But there definitely isn't mass panic selling happening in the market. To put it into perspective, in the 2008 crash, in the same 3-month period, property prices dropped by roughly 28%. This shows that investor sentiment is much stronger now compared to previous slowdowns, and sellers are choosing to hold on to their properties. Now next, onto the segment that a lot of people are worried about, and that's off-plan properties. Many investors are wondering if developers have massively dropped their prices. Will developers actually complete their projects, and will investors who bought off-plan still make money? Let's look at the data. Before addressing the main concern people have, which is whether developers will drop their prices, one of the biggest concerns about off-plan is whether developers can actually finish what they've sold. So let's look at the 4 biggest developers in Dubai and their financial position right now. Firstly, Emaar, government-backed developer with the UAE government holding a 30% stake. The revenue backlog sits at $42 billion. That's the money they're still owed by buyers on payment plans, multiple years of guaranteed revenue. On top of that, 21 billion in total liquidity and 11.7 billion in escrow. Next, Damak, the largest private developer in the UAE, a backlog of $20 billion, roughly 5 years of secured revenue, and 7.7 billion in escrow and cash combined. And thirdly, Shoba, another private developer, they have a revenue backlog of roughly 2 years and $600 million in corporate cash. That's enough liquidity to comfortably get through 2026. And finally, Bengati, the most aggressive grower of the 4, their 2025 revenue doubled versus 2024, and they have a revenue backlog of 4 billion. The pattern across big developers in Dubai is the same. 5 years of explosive growth gave these developers massive revenue backlogs and deep cash reserves. Even if every new sale stopped tomorrow, they have the financial runway to complete what they've already sold. But the question is, will off-plan developers actually drop their prices? There's one deep reason why the price of off-plan will not go down from big developers. When a big developer drops their prices on a new launch, every single buyer they sold to in their previous units loses money. Think about it. If you bought in Emaar's last tower at full price and Emaar drops the price on the next tower, you're suddenly sitting on an asset worth less than what you're still paying for. Now multiply that across every off-plan buyer they have, and that's how you get lawsuits, refund demands, and people dumping their units on the resale market at discounted prices. When people dump their units on the resale market at a discounted rate, these transactions are public, and this will reflect on the developer that their investors lost money because of them. This massively hurts the developer's reputation, and big developers simply can't afford that. We saw this exactly play out with Emaar during COVID. Sales slowed dramatically, but Emaar held their prices across every project to protect their existing investors. And on top of that, construction costs are massively increasing. Steel, cement, material costs across the board have massively risen due to the energy and supply chain disruptions in the Middle East. So inflation in the materials market have all pushed construction costs higher, and these costs will stay high as energy prices, according to energy experts, will not return to pre-conflict levels until 12 to 18 months. And here's the thing, developers pass cost increases through to the buyer every single time. Developers need a fixed margin to make their project work. If their costs go up, their selling prices also go up. That's the basic business equation. So when you see a new launch from any of the big developers, that price isn't arbitrary. It reflects today's construction costs plus the margin they need to operate, which means the next launch you see from a major developer will be priced higher than the previous one. What developers will do instead is slow down launches and wait for demand to pick back up, and they'll offer better incentives like DLD waivers or more flexible payment plans, and we're already seeing this play out with my clients. We're closing deals with big developers who are now offering DLD waivers. The same developers a few months ago wouldn't have offered that, and in some cases we're also negotiating better payment plans for our investors, but the overall price of the property is not coming down. But we're also seeing very strong activity on launches and assets that are priced correctly. For example, this week there was a launch in Abu Dhabi, which was golf course townhouses and villas on Hadayrat Island. Now, the minimum entry to the development was 4.5 million dirhams, and it went all the way up to 35 million dirhams. And the average ticket size was around 8 to 10 million dirhams. And this project sold out extremely easily. There were far more buyers than available units, and it was genuinely a fight to get units from the developer. So if you've been considering to buy off-plan in Dubai, then this is one of the best buying opportunities we've seen in the past 5 years. Prices won't be dropping, developers are offering incentives they wouldn't have offered a few months back, and the window will only last until demand picks back up, at which point developers won't need to offer incentives at all. So let me bring this all together. What happened to Dubai's real estate market after the conflict is exactly what should have happened. A slowdown, the kind that happens after any major regional event. On property prices specifically, here's the nuance. Sellers are accepting more favorable terms than they were 6 months ago, and distressed deals are still happening in the market, but we aren't seeing mass panic selling happening in the market. On good assets, we aren't seeing anything above 10%, and any property with a discount larger than that was likely going to take a hit regardless of the war, and the war simply just accelerated that. Off-plan has slowed, but prices won't go down. The big developers can't drop prices without destroying their existing investors. So here's what you need to do. Big developers are offering incentives they wouldn't have 6 months ago, DLD waivers, better payment plans. These won't last, and sellers are being more lenient. The moment demand picks back up, this window closes. And if you are a seller and you don't need the cash, then simply hold. Right now is the worst time for you to sell your property in Dubai. Transactions are at a seasonal and cyclical low, and any buyer right now is going to push hard for a discount that you don't need to give. If you can afford to hold, then simply wait. Fundamentals of Dubai haven't changed. The long-term vision of the city is intact, and this is still the most stable economy in the region. Infrastructure spending hasn't slowed for a single quarter. Metro expansion, Al Maktoum Airport expansion, and the 2040 Urban Master Plan, the city is still being built for the next 2 decades. Wealth keeps flowing in. High net worth individuals from Russia, India, China, the UK, and Europe are still coming to the city, and Dubai is still among the top wealth migration destinations in the world, and it's still backed by one of the largest sovereign wealth funds in the world, and on a global comparison basis, Dubai is still cheap. Prime apartments here trade at around $540 per square foot, and prime London is 2 to 3 times more expensive. Prime New York is 3 times more expensive, and Hong Kong is 4 to 5 times more expensive. So you have a top 5 global city priced like a tier 2 city in a stable currency with no income tax. That's why Dubai remains one of the most stable places in the world to store your capital. And this conflict is simply a short-term slowdown. Long-term, fundamentally, Dubai still remains as one of the greatest investments, and a short-term slowdown does not change that. Now, if you need help investing in Dubai properties, then you can click on my WhatsApp link where we can find the best suited property for your needs. Otherwise, I hope that you enjoyed the video.